So this is something that I came across economic times not too long ago, wherein a guy lost 95 lakh capital in a single day. So this guy was actually a day trader, means he was supposed to enter a position and exit his position on the same day, but he actually lost all his life savings in a single day. Okay, so this is something that I'm explaining it to you not to scare you, but we'll just try to understand how can you avoid such a mistake. And this is the most important thing that you should know before you enter the stock market. So let's learn this with an example. Now there is a trader who enters the stock market, well, that is trader A. He is quite disciplined, he is quite patient, he has a clear strategy in mind. Okay, he has done his back testing, everything, and he's very clear about his strategy. He has a set stop loss before even entering the trade. He has set a stop loss, like how much of a loss will he be taking, and he's also disciplined, not only for a day but throughout the month. Like, he is very sure how many trades will he be taking in a single day, or how many trades will he be taking in a single month. Moving to trader B, okay, this guy is a bit confused. He does not have a clear strategy in mind. If he hits his stop loss, he'll change his strategy, he'll learn a new strategy, think that the strategy is not working, so he'll change the strategy. He even does not have a stop loss in mind. So he just takes a trade, and he is decided that he'll take a stop loss later. Now he is not at all disciplined. He does not have a clear goal in mind, that how many trades will he be taking in a single day. So even that is not set. Now what happens in live market, that is something that let's look at this example. So trader A, he enters a stock. For now, in this example, let us assume that both the traders are following the same strategies, the same entry points for a stock. So trader A, using a strategy, specifies or locates a stock, okay, selects a stock, enters the stock at 1000 rupees. In spite of his strategy, in spite of his research, the market still goes against him, and the stock now has fallen down to 900 rupees. So he's on a loss, he's in a loss of 100 rupees, but he accepts the loss, and he exits the stock at 900. Now moving to trader B, what he does is he is following the same strategy. He enters the stock at 1000 rupees, it goes down to 900. He still does not exit it, and he thinks that it will go up eventually. So then moving further, it falls down to 700, and he still does not exit it. Now when it is reached down to 500, that is the time when he is in a panic situation, and he exits the stock. Okay, because he did not have a clear strategy in mind, he did not have an exit plan, he did not have a set stop loss, so he has faced a loss of 500 rupees in a single trade. Okay, now eventually over the period of time, let us see what actually happens. So trader A, following his discipline, and he has a set stop loss of 100 points per trade, he trades for the next 10 days. Okay, because he has taken small losses every single day, he is able to keep his capital intact, and he is able to trade for 10 days. Okay, now although he is new, he is disciplined, he is patient, he has a clear strategy, but still market does not go how we want, so he loses in 6 trades. In 6 trades, 100 points each, so he gets a loss of 600 points. But 4 days his strategy actually worked, and he has made 200 points profit in only 4 days. So out of 10 maximum days he has lost, but 4 days he won. So eventually 6 days he lost into 100, that is 600, but 4 days that he made profit, 200 into 4 is 800 points. So at the end of 10 day, he is still in a 200 points profit, that is 20%. Okay, so he is very happy. He has made 20% profit at the end of his 10-day cycle, plus he has got his capital intact. So he is much more confident, he is much more disciplined, and he can continue with this strategy. Okay, because he has still made profit, even though 6 days he was losing, but still. Now looking at trader B, what happens with trader B? Okay, he has followed the same strategy, the same entry point to enter a stock. Now he entered the stock at 1000 rupees, but he did not losses. So he took 2 trades on the same day because he did not have a trading plan in mind on how many trades will he be taking. He took 2 trades on the same day when his strategy was actually not working. Each trade he lost 500 points, and he has eventually wiped off his entire capital on a single day. Okay, this was the end result because of not having a proper trading plan in mind. Now, even if he wants to trade, even on days that his strategy would be working, is something that he won't be able to trade because he does not have the capital. So the main thing in stock market is to protect your capital. Okay, you can be wrong. Even ace investors can be wrong. They are wrong. Market does not go according to your plan. Okay, so you need to respect the market and accept your losses. Now, the guy whose example we saw in the beginning, who faced such an enormous loss, he lost his entire life savings. He might have kept his money for his future, for his career, but he lost all his money in a single day. Okay, so looking at this example that we saw, there were 2 traders who had the same strategy. I mean, they might be following candlesticks, they might be following MACD, they might be following RSI, whatever strategy. They had the same strategy. So is strategy really important? The answer is no. You do not need a strategy to be successful in the market. The most important thing is risk management, survival, your ability to take losses. So it's your psychology, your mindset that will actually help you to become profitable in the long run, in the short market, in the stock market. Okay, so that is something that will really help you. Now, looking at some Indian examples, even I am guilty of investing in Yes Bank when it was at 400, and it fell down to 17. Right now it's like at 17, 20, and 2024, and when we are recording this video. So anyone who had invested 1 lakh, it's not even worth 10,000 rupees right now. Similarly with Jet Airways, at one point it was also trading above 1,000 rupees. Now it's been delisted, so it's a 100% loss. So anyone who might have invested his life savings on one single stock like Jet Airways, or might have invested their life savings in Yes Bank, there are many such examples as well, like Reliance Communications, and there are many other companies who have been delisted, which have wiped off the entire capital. Now, the exact or the most of the traders use the risk to reward ratio 1:2, wherein even if you're wrong 6 times, even 40 to 45% times, if you're right, if you follow 1:2 risk to reward ratio, you will still be profitable in the end. Okay, so what do we really learn from this entire video is that don't put all your eggs in one basket. That is, don't, even if you're 100% sure on a stock, please do not invest all your capital in one stock. Just a mere entry and exit does not make you profitable. There is no strategy that has 100% accuracy. If a trader or if a teacher tells you that our strategy works 100% of the times, just leave. Okay, that is not at all possible. What a new trader generally does is that they keep changing their strategy. If their one strategy does not work, they jump on to the next strategy. If that strategy does not work, or you hit a stop loss in one day, they jump to the next strategy. So they'll keep on changing their strategies. Okay, so your first strategy was also good, your second strategy was also good, and you did not need to learn the third strategy. So it's not the strategy, it's actually your mindset, your psychology, because of which you are not making money in the stock market. So if you have a strategy in mind, you have back tested it, and according to you it has worked in the past, it will definitely work in the future. You just need to work on yourself. And as I mentioned in my previous videos as well, to be successful in the stock market, it's only 20% of strategy, 80% you need to work on yourself, your psychology, your mindset. These all things play a very important role. Okay, so all the best and happy trading. Goodbye.